trophy. Raise it up, lift it up, push it up, a little bit high. Hi everybody, this is Aphria from mychartcoach.com, and in this video we're going to take a look at the marijuana sector. And so this is the marijuana index. You can check this out at marijuanaindex.com. And yeah, so this is tracking the marijuana sector stocks. Right now it's been in a sideways action here for the last few months, and so we're going to see if it can get going. This is the North American index. If you look here at the Canadian index, we're looking for potential breakout here above the peaks. There was a peak in October of 2016, again in February or January here of 2018, and then again in June of 2018. If you drew a trend line across those tops there, that's going to be the key level to break. Check out the higher lows, and so it's making higher lows. It's working its way up here, and so we're going to see if it can bust through that horizontal resistance and take the marijuana sector to the next level. If you look here at the Canadian, yeah, that was the United States index, and then if you look here at the Canadian index, you could see here on the 3-year chart, it had a really strong push up here heading into January, where it peaked, and then it's been getting faded. It's down here at 500 right now. This is going to be a key level to hold. There's not a whole lot of support. The big support is way down here. It looks like in the 300s. So it's going to be important that it finds support here. We're going to see if it can get a bounce going. If you look here in the last month, it tried to get a little bounce going today. And then now I'm going to go through and I'm going to show you some charts in the sector. First off, we're going to look at MJ. This is the Alternative Harvest ETF. And so it did bounce today. It pulled back down here, and it's hitting this double bottom support level from April. And so if it can hold this 2650 level, that would be bullish. It needs to get above $27. That's the EMA 8. That's the line. A close above that level would signal it's heating up. All right, so we'll see if the marijuana MJ, which is the Alternative Harvest ETF, which also has tobacco stocks, you could see here that when it broke down here below this upward channel, that signaled the downside risk. So this isn't a pure marijuana sector play, but it does have marijuana sector stocks in this ETF. And so keep an eye on PSAR here. Once that flips below, that's going to signal a possible reversal of this downtrend. And yeah, if you look here at the MJ weekly chart, you can see it came down here and it's testing support here from April, and then yeah, this is a key was a key resistance zone from back here in 2016, and so it's hitting this level right now. This will be a key level to hold and bounce off. For the big downside risk is it comes down here and tests the support, which would be down here at 23. You'll know the chart's heating up if it can get a weekly close above EMA 4 at 2744. Okay, take a look at Hmlsf. This is the Horizon Marijuana Life Science Index ETF, and this is more of a pure marijuana sector play, but check out the volume. It's super low volume. Not a lot of volume for this ETF. It has been in a downtrend. It did close above EMA 4 and then right at EMA 8 today at 1242. If it can get above that level, EMA 13 at 1262 will be the next key level to break. It was a bullish close above EMA 4. That was the first close above that level since where is it? Way back here. And so on the 9th of July, and so that signals the chart could heat up. So we'll keep an eye on, we'll see if we can get a reversal going here. There's not big volume behind this. You'd want to see a volume spike, but you never know. Maybe volume will pick up. You could see PSAR here. The dots are getting close to having a flip. This has been a big pullback. Our Fasto is now above 20, so you want to see it get back above 20. But yeah, it's been very oversold, and so we'll see if the marijuana sector can get moving. If you look at TLRY, it had a big pullback here. It's down 4 days in a row. It did close below the close here on the 19th, on the first day of trading, and so that is a red flag. It needs to get back above 2250. The two big levels to break now are EMAs 4 and 8. If they remain resistance, that'll signal more downside risk. Once it gets above that line, EMA 8 at 24, that's when it could get moving again to the upside. To the downside, you could see it come down here and test that low
down here at $20. That's where it would be heading if that 2250 level remains resistance. You can see they've been able to walk it down a relatively light volume compared to the IPO volume at the start. So if you look here at TLRY on the 30-minute chart, you can see here it's been, they faded it, they pulled it back, it had that nice run up to $34, and right now it's hitting some key support. It channeled out today. It had a nice sideways channel for showing that it's holding support here at 22. That's from back here on the first day of trading. This is the entire history of the stock. Down here at 2050 would be a key support level. If it came down and tested that level, you should see some buyers down there. There was a little volume spike into the close. You'll know this chart is heating up when TLRY breaks the middle Bollinger Band at 2271 on the 30-minute chart. That's similar to back here on the 25th when it tried to make a little rally. That's going to be a big step. If it can get above EMA 13 at 2252, that would be a big signal. If you see it trading above 2250, that's going to be your clue that, okay, TLRY is starting to bounce. Okay, so let's take a look at GWPH. This is arguably the number one marijuana, it is, right? The number one marijuana pharmaceutical company in the world. They have the FDA approved CBD drug. So this is the top dog for a pharmaceutical marijuana play. And it pulled back and it came down and it hit this 200-day simple moving average at 131. And so that is the key level to hold right now. It needs to hold this red line. If that level broke, down below is the 300 and 400-day simple moving averages down here at the 122 support zone. And so that would be the next level that it would possibly drop to. If it failed to hold this 131 level, it needs to break above that EMA 4 at 137 and then above that gold line, which is the 100-day simple moving average at 138.67. If they remain resistance and that 200-day simple moving average breaks, support level breaks, you could see that 122 zone tested. So it's going to be real important that it holds support here and breaks through resistance. Take a look at CGC. This is Canopy Growth. This is the number one marijuana company in the world. I know that there's some others that are very close. They are talking about having a split, a stock split, and so from if I gathered the information correctly, it would be something like a 3-for-1, or so instead of having one share, let's say at $24 for CGC, you would have 3 shares at $8. And so they're going to be lowering the share price, and that should attract more investors, especially the retail investors that like to trade penny stocks, and so maybe that would be more attractive to the marijuana sector, the people that are interested in that sector. So at least that's my theory on why they would be doing that, is to attract more investors. But we'll see what happens with that. If you look here, they've got the big pullback, and then it hit this 2450 level, and now it's hitting the 100-day simple moving average. That's going to be the key level to break. That's currently at 2645. It bounced and it's holding EMAs 4 and 8. You can see the pink line here and the lime line are pinched. If that pink line crosses over that lime line, that's going to be a signal, an early bullish reversal signal. The candle is right at a flex point here. You can see the real candle body today, that square, it is right in between the resistance and support. If there's a break above EMA 13, the orange line and the gold line, and the 100-day simple moving average, that's going to signal upside potential. In the middle Bollinger Band at 2734 will be the target. If it breaks below the green or the lime and the pink line here and drops below 26, that's going to signal downside risk, and you could see this 2450, possibly a drop down to 2292 and testing that 200-day simple moving average. It's going to be real important that it breaks through resistance here. It does have the you can see here it has I hate to say it, but it has the bear flag you know, so it came down and then it bounced and then it has I mean, I would say that this 100-day simple moving average is horizontal resistance. It does have a little curve to it, but it has this bear flag look, so it's just so important that it breaks through this 2645 2650 level in order to head higher. There was a PSAR bull flip. Look at the green dots here. They were above the candles and then now they flip below, and so that's another clue that the chart's heating up. Also down here you have a MACD bull cross on the 8, 13, and 5, and then it's pinched on the 12, 26, and 9. When that MACD line, the black line, crosses over the purple line on the 12, 26, and 9, that'll be a good signal that a possible new uptrend starting. If you look back here when there was a bull cross back in May, you know that was the signal of a nice push higher. You know, it went from here to here on that MACD bull cross. So that's what you're looking for now. The 8, 13, and 5 signals early, and once that 12, 26, and 9, you know, sometimes it'll cross back over again like it does here, but you know, if you get it on a pullback like this and it crosses over, many times you're going to get, you know, it's going to signal the start of that next uptrend. If you look at CRON here, this is Cronos Group, closed up 2%. So yeah, this has been pulling back. If you look here, it looks like a descending triangle type of pattern. It has a descending resistance, right? And so that pattern kind of breaks. The top of that would be up here at around 825, but then if you draw a descending resistance line this way, it lines up right with these candles, and so it's going to be all about breaking the descending resistance, currently around $7. That would be a huge level to break. Once it breaks above that line, you know, that's going to be a signal that it's breaking out of this pattern and it's finally ready to head higher. It can trade within that level, and that's what you're looking for now. But what it needs to do now is hold this horizontal support line. That's the April, May, back here in February. You can see this. All the closes we're holding 550, so it has to stay above 550. If it closes below 550, that's going to be a major red flag, and you could see it drop down to the 300-day simple moving average at 470. That is the downside risk. The upside potential is a break above the 200-day simple moving average at 618. That's the red line there, and EMA4 at 610. Then you're looking for a potential run up here to the middle Bollinger Band and this green and gold lines. That's the 50 and 100-day simple moving average up there around 675. Okay, so yeah, take a look at Acbff. Okay, this is Aurora Cannabis. Had a big pullback here. Look how they dropped this thing super hard, right down to that 300-day simple moving average at 511. It's been holding that level. You know, you had the load here. Not big volume. You know, it's always better if you get a big volume spike at the bottom. You know, it'd be better if you had like a 5 million type of volume bar down here, showing that people were really loading, but it could still get a reversal. It closed above EMA4 today. That was the first close above that level. It looks like since back here on the first trading day of July, and so that's a signal the chart is heating up. If it can get above 550, it could get moving. Notice the PSAR is right up here at about 560, so if it hits that level, these green dots are going to flip below the candles. That could signal the start of a new push higher, and then yeah, then you're looking for a break above the EMA 13 at 572. A drop below the 300-day simple moving average at 511 would be a major red flag. The next support level, that 400-day simple moving average, is way down there at 431. Okay, take a look at Aphria, Aphqf. All right, so it's back above the middle Bollinger Band. It did have a PSAR bull flip on Monday. The green dots are now below the candles. It came down here and it held the 300-day simple moving average support zone. And that's the blue line here. You know, it came down here. It's holding this zone. Yeah. So it's got this, you know, a little bit of of more of a ascending support line. You know, it's not perfectly horizontal, but it came down here and tested this zone. It made a higher low, so that's good. And then what you want to see now is a break above this 50 and 100-day simple moving averages, basically above $9. If Aphqf can get above $9, that would be really bullish, and you'd be looking for a run up to $10 up there to test that 200-day simple moving average. You can see that's lined up with the high closes up there at just above 10. And so yeah, so that would be the next target if it can get above that level. If it drops below the middle Bollinger Band at 856, that would be a red flag. It needs to stay above that level. Okay, so let's look at Attbf. This was a big winner today, closed up 26%. Nice move above the middle Bollinger Band. Check out that volume spike. Huge volume behind the move. All right, so it had the PSR bull flip as well. You know that they've been flipping back and forth. The big deal with this one is the middle Bollinger Band there at 0.095. If it can stay above that level, it could get a new uptrend going. You can see the last close above the middle Bollinger Band was back here on the 21st of May, and so that is a bullish development. It just has to stay above, and then now the target is that 50-day simple moving average at 1224. That is lined up with the upper Bollinger Band. It has to get above that level, close above, and turn it into support to head higher to make it possible run up to that 100-day simple moving average. If it comes up here at this 50-day simple moving average and stalls out, that would signal a possible temporary top. And then, yeah, you just have to keep an eye on that. Yeah, this is on a 4-day run right now with the big volume spike today. On any kind of pullback, it has to stay above that middle Bollinger Band to keep the uptrend going. We've got the bull crosses on MACD here, so that's another signal the chart's really heating up. Okay, let's look at Emhtf. This is Emerald Health Therapeutics. So the chart's heating up as well. It closed above the middle Bollinger Band on Monday, so that was a good start. Today it closed above that level as well. It's back above the black line there. That's the 400-day simple moving average. So it needs to hold this level. If it can, then the next level to break is going to be this 300-day simple moving average at 263. You know, that's not bad. You know, it's a nice 15% gain or so, just right back, or at least 10 to 15 back to that blue line there. If you can get above that, the 50-day simple moving average at 281 is the next key level to break. The 225 is the key level to hold, and that 222, it needs to stay above that level. If it dropped below, that's going to be a major red flag and signal more consolidation. So keep an eye on Blozf. Yeah, they had a big drop. There was some Canadian legislature about using saliva testing. This is a breathalyzer, cannabis breathalyzer company, and so they came out with a press release saying that they were, or a company statement or something like that, saying that they were going to stick with their plans, and that they feel like it's still that they have the best technology to detect marijuana for drivers. And so yeah, so this is basically it had the big drop, and then it had the big bounce today. And so they took it down to 80, and people really loaded. You could see down here there was a big spike on accumulation distribution, a spike up on shaken money flow after the big spike down the day before. And now it's back above that 300-day simple moving average. It needs to stay above that level at 118. It hit EMA4 at 137, and it pulled back. It's going to need to close above that level to head higher. If that level remains resistance, it's going to signal the bears are still in control on this drop. You know, a downtrend started back here on the 16th when there was a close below the middle Bollinger Band. You know, it hasn't been able to close back above the middle Bollinger Band for the last couple of weeks, and so that is a signal that the bears have been in control. You know, if it closes back below that 300-day simple moving average, that would be a major red flag, and you could see it drop back down to $1 to test that 400-day simple moving average support level. You can see where it's bouncing off of here. This is a big support zone from back here in April and June. So you can see when it pulled back in April and June, it held this zone. And so it's real important that it continues to hold this level, and it doesn't drop below 115. You know, if it closes below 115, that would be a major red flag, and you could see it, work its way down to lower levels. Okay, so take a look at CVSI. This has a really nice uptrend. You know, every stock in this video is a marijuana sector stock. This one is pushing higher. Check out this sweet uptrend here. You know, it's not moving super fast, but it is riding the EMA4 at 288 support. As long as that level is holding, the chart's super strong, and it signals more upside potential. You know, on the dips, when it had the last big run, it would come down to EMA13, the orange line, and hold that level. It came down to the middle Bollinger Band, but you could see the dips, most of them were testing that orange line and holding until it finally broke down, and that's when it got the dip. But as long as it keeps that same kind of pattern going, where it's just riding EMA's 4 and 8 support higher, it signals more upside potential. Once you get a close below EMA 8, that's when it's really cooling down. And if it got below EMA 13, that's when you get the big drop down to that middle Bollinger Band. For the upside, if you look here at the weekly chart, you can see here it's had this nice uptrend, that started back here at the end of 2017. And so, yeah, this has been a huge gainer this year. It's headed up here to this closing price from back in 2015, the January high close. It looks like in the $4 range. Yeah, that's going to be the big level to break. If it can get above this level, this resistance zone from back here in 2014 and 2015, that would be extremely bullish. That's the big level. That'll be a huge level to break. It could really get moving. You've got the 300-week moving average way up here at $8. I mean, nice steady uptrend. You can't beat that. As long as it keeps holding EMAs 4 and 8 on this weekly chart, as you can see, the best thing to do on the stock has been just to keep riding, right? Because, I mean, if it's not broken, don't fix it. If it stays above 221, that's EMA 8, and keeps closing above for the week, I mean, the chart's not broken, and there's more upside potential. So, yeah. The very, very cool chart there. Okay, look at Scna. This is Smart Cannabis Corporation. Closed up 46% today. So yeah, this was a big winner. Had a nice bounce. It closed back above that middle Bollinger Band. So that's currently at 0.42. It needs to hold that level, get back above the 300-day simple moving averages. The moving averages are all stacked up right here. The top one is that 50-day simple moving average at 5.6. Right now, if it can just stay above that middle Bollinger Band at 4.2, that would be a good start. You can see it had all these red volume bars and red candles in a row, and so yeah, and it bounced on a big volume spike. It looks like bullish engulfing reversal pattern formed today, and so be looking for a bullish reversal confirmation. Now, if it dropped back below that middle Bollinger Band and it failed to stay above 4.2, that would be a red flag signaling more downside risk. Okay, look at Abccf here. Okay, another OTC stock. This had a nice close above the middle Bollinger Band. There is a small gap between high of day yesterday and low of day today. So if it dropped down there to around 94 or so, that would fill the gap. It hit the 50-day simple moving average at 104 and pulled back. That's the big level to break. You can see here it got above that level in June, failed to hold, and pulled back. Once it gets above that level and that level holds, that's going to be really bullish. That's when it can get moving. You do have the 300 and 100-day simple moving averages just above at 112 and 116, and the 200-day simple moving average up here at 131. So yeah, keep an eye on this. If it can stay above 93 here, that's the middle Bollinger Band, which is also the 20-day simple moving average. That's the dotted purple line there. That signals the possible start of a new uptrend, and to keep riding. A drop below 93 would be a sell signal. Okay, let's look at Frlf here. This is the last stock in this video. I want to show you this one just because there's a lot of stocks that have a very similar pattern to this in the sector right now. I don't want to, I can only show so many stocks in the video. I want to get a nice little variety for you guys. And this one here has a very similar pattern I'm seeing on a lot of these stocks. And so what's happened is they've come down and pulled back to this 300-day simple moving average, and a lot of them are hitting a key support zone from earlier in the year. A lot of them are from April, and yeah, if they hold this 300 and just below that 400-day simple moving average, this is the reload zone. Now, if it dropped below 10, that would be a major red flag. That would be a sell signal. If it dropped below 11, that would be a sell signal. It has to stay above that 300-day simple moving average. It has to stay above this closing price from back here on April 9th. To the upside, it needs to stay above EMA 8. It closed above EMAs 4 and 8 today, so that was a good start. It needs to stay above 12 cents there. And then you have EMA 13 at 12.8. It hasn't closed above that level since back here on June 18th. The close above the EMA 8 today was the first close above that level since back here on June 18th. So when you have a huge downtrend in all, they have the algorithmic trading program set to not let these key levels break, and so when the program's set to sell at these levels, that's why every single candle is forming below those levels. Once it breaks above, that's your clue. Okay, the pattern could be changing. It doesn't mean it's definitely changing. It just means it could. This could be the start of a new uptrend, similar to back here. When it pulled back, it was forming candles back here in March below EMAs 4 and 8, down lower, lower, lower. And then once they finally let it close above, here it's above EMAs 4, 8, and 13, that's when it finally got a chance to breathe and get moving higher. And so that we're always trying to find that point where it's right when the trend is changing, because that's where you can get the good entry points. And that's where you have the potential to make the best percentage gains. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.